So we're going over this other BTC trade, this Bitcoin trade that I took today. Very similar to, pretty much the same trade actually, as this Tuesday trade here that swept the other previous high levels here. So we then marked out this level here, this high, and so now we're going to see, so I'm now put into replay for you guys so we can do it in step by step and actually break it down fully. So right now what we're doing is we're waiting for price to actually test these levels again. Okay, so let's go down to the lower time frames. Let's go to the 1 minute. Okay, so let's have a look. Price is now going to test this this high here. Okay, let's see what happens. Boom. Now price has just come up and exploded into this area. That's what you kind of want. Always when you're in a trade, you want momentum and see that volume. Okay. Right now we're gonna see how this one closes. But what we can do is we're gonna go down onto the 30-second because that was quite explosive. Okay, what we can see now on the 30-second is that it has formed this FEG here. Okay. Now, what can happen from this FEG? Let's mark it. 30-second FEG. Okay. Look at that. Alright. So what happened was now either price will come down and test this FEG and then continue, or we can see this FEG becoming an IFEG, which is the price inverses it. So if we see a candle close after this, closing out, we will look to short here. So let's see what happens. Boom. Okay, that was a bit quick. So let's just show you. So now this has now inversed. Okay, this is 30 seconds, so it's not going to be this quick. Okay, you got a bit of time here. So 30-second just closed below this. So now this becomes an inverse fair value gap. So now with these, as it becomes inversed, we can look for a short here, a sell, and our stop loss will be at these wicks, these candle wicks here, for the previous high. Now you look for the nearest zone of liquidity. Okay, this will be a trade that you would take maybe to get your payout, or just that has a bit of rules. Okay, that you just in and out of the market and done. But for someone that maybe has a live account or a prop firm that doesn't have too many rules and you can actually hold trades and take big wins, you'll look for something a bit bigger. Because what we saw previously was price reacted quite violently from that other zone, that other high that we tested, and came down quite hard. Okay, I'm obviously on the wrong. Okay, yeah, so you saw that momentum downward here. So maybe you're looking to do the same thing with this one and carry it down. There's some people that would just take this trade right now and be done for the day. Just depends on your trading style. So let's go back to the 30-second I was on. Alright, so we would have been in this trade like this and entered off of it like that. Okay, and that would have been your trade there. For myself, I would look for other levels, something like that, or even let's just go for the nearest one like that. Okay, let's see what happens. So you can see quite a nice displacement into the downwards area here, and TP gets taken out. So this, yeah, like I said, depending on trading style, I would have left runners here, but again, this is not the same trade I took. I took it even lower down. But here, take 90% of your profits, leave a runner going. So what we do there is we'll go to break even here, or if you trade aggressively, you can leave your stop loss still there and leave your runner going until you're happy to take the actual position, the full position size. So what we did now is take 90% of this position, leave a little lot size going, and we can just see how it plays out. You can reach for lower levels. And what we can see now from these levels is it forms more FEGs, okay? Another FEG formed here. What happens? It's going to retest it. Boom. This first level FEG gets taken out, goes to retest another FEG. So retested this other one here. You can see it keeps retesting there. What happens? It breaks through. It then goes for the next one. This one here breaks through. So let's go to the 1 minute here. You can see price letting this thing run. And we have some FEGs here, the 1 minute. So it came up, tested this 1 minute. Let's actually pause here. And then it also formed FEGs while going up, okay? This one right here, a bullish FEG, okay? So what happened is, price came up, tested previous FEGs here, then came down, tested this bullish FEG, tested again, rejection, came up to test this FEG, the 1 minute, came to retest the other one here. So you can see how the market can also play around with these FEGs and how it can consolidate in these price zones because of it. Okay, so what we saw now is it tried to test it again, obviously didn't have that momentum, came back down, tested this one again. What happened? Inverse that fair value gap and then test it again. So that's why we will always have our stop loss here. So if you wanted to re-enter, you can enter off of this one again as it closes. Okay, stop loss here. And then you look for the next levels of liquidity. But again, if you're just looking to re-enter, you can re-enter there and just let it run. But let's see. Let's say if we re-enter there again. So price is just consolidating, still just checking this zone here, this FEG. And what do you know? Fall down again. And a second TP hit. Alright, that'll be enough for today's trade. I'll be doing this every day now. I'll try to do some live ones for you as well, to show you in a moment. But yeah, I hope this has helped. This has just showed you a bit of fair value gaps, inverse fair value gaps, and how you trade it. Again, they only really work with sweeping liquidities. We can make videos on liquidity zones and how to find them. But yeah, check in the next one.